Good morning, good afternoon, good evening, wherever you're in the world. Welcome back to the channel and welcome back to another Quant update. It's been a few days since I made a video on Quant, but just because the price wasn't doing much, so there wasn't really much to talk about. But today, I'm going to show you some of the things that I see on the price chart here, which I believe are going to happen in the coming few days or so, right? So we'll begin by showing you the immediate major resistance and support lines that we have on the price chart. Also show you like two bullish scenarios that we have on the price chart, as well as maybe a bearish scenario at the end of it, and we'll tie it all together, and then we'll come up with the conclusion, and then we'll wrap it up for the week. There won't be any video over the weekend unless there's some crazy price action over the weekend, right? But before I do that, I just want to ask you to delicately tap the like button, make it colorful. It really helps with the YouTube algorithm. People looking for this kind of information will now be able to find it much more easily, right? Also, if you're interested in Quant, which I'm sure you are, be sure to subscribe to the channel because I do TA on Quant on a regular basis. So without me running my mouth too much, let me get into the real stuff. I already highlighted the first line of resistance that we have on the price chart on a daily time frame, which starts from the 108.5 thereabout up until the $112 region, somewhere there, right? So this is the major resistance. We've been fighting it since forever. I mean, it was important back here, it was important a couple of times here, and now we're finding some kind of resistance over there. The second resistance that we have is this downward sloping resistance right here, dating as far back as the 6th of February 2022. So yeah, we have this downward sloping resistance right here. We also have got another horizontal support here, which I'll show you in a minute. Right here, I talked about this resistance in the last video. The $88 mark is another line of support that we have. So we have got this support here, resistance here, and then this downward sloping resistance right here. So with that being said, let's quickly get into the bullish scenarios, right, that we have. So you can see that on the daily time frame, we have a falling wedge right here, and it's a perfect one. It's a really nice one, especially on a 4-hourly time frame. One thing I really like about falling wedges is their bullish patterns, and they've got about 66% success rate to reach the price target, in which the price target right here would be something like $122, $123 they were about, and it's coming into confluence with this downward sloping resistance right here that you see over there. Now this falling wedge is looking like it has already been back tested, because you can kind of see that we had a breakout right here, we came down right here, and we are trying to go higher. And taking a look at the 20 DMA, the 20 moving average on a daily time frame here, it's looking like it's actually supporting this back test of the falling wedge right here. So it's really good to see. I mean, I'm already in a trade already, but I would really want to see the price getting above this range right here. So yeah, looking pretty good on the daily time frame with this falling wedge that we have on the Quant price chart here. Another thing that is optimistic on a daily time frame is we are looking like we are headed for a bullish cross right here. You can kind of see that the 50 moving average here is turning upwards, and it's likely that in a few days or so, or in the coming week, we will have a bullish cross right there. It will be really helpful to get above this resistance right here, and then we continue to see if we can hit our price target, which is the top of the wedge, sitting at $123. Now it brings the question like, okay, when we get to $123, what kind of a structure do we now have, right? I've been talking about this. Let me first close these moving averages, and you can kind of see that if we would go on to hit the price target for this falling wedge, we'll come up with something like this, like an inverse head and shoulders pattern, which is actually really bullish. Let me quickly draw it nicely here. So yeah, this is the kind of setup we would have on the Quant price chart if we go on and hit our price target with the falling wedge, a massive inverse head and shoulders pattern, right, which is really bullish, right? Another way we could look at the bullish scenario is through Elliot Waves, right? So here we came up with a 5-wave count from the bottom here, right? 3, 4, 5, right? And we got rejected. And it's interesting why we got rejected really, because if you zoom here on a daily time frame and pull out your Fib retracement tool, you actually see that we got rejected right at the point, let me see, we got rejected exactly at the point 236 Fib retracement level right there, and ever since there the price is corrected in what we like as zigzag correction, right? Let me go on and clear these things so that you can see things clearly. So this is what I'm talking about. We have an A, B, C correction right here. So yeah, this would signal that the correction is over right here, and we are beginning a new wave, in which you would say this is wave 1, wave 2. This will now be the beginning of wave 3 to the upside right here if you're going to stick bullish. So you'd be expecting price to start a new wave here, which is in form of a 1 2 3 4 5, right? Impulsive waves to the upside there. So would have to wait, because the thing with Elliot wave counts, they're really subjective, right? You would see things that you want to see, but things get clearer as time passes on. So yeah, we are waiting to see what exactly happens right here. Okay, now that we have talked about the bullish scenario, let's prepare ourselves for the other scenario, right? The bearish scenario. You can see that price is actually stuck in between a range right here, because we have got resistance, major resistance on top right here. We also have got major support right here. So the bearish scenario would be satisfied if we manage to come down right here, and then we close a candle below the $88 there. Would have created the opposite of an inverse head and shoulders pattern, right, which is a straight head and shoulders pattern right here. And well, this wouldn't be looking too good, but we would have to see when we come to the $88 mark to see if it holds its support or something like that, for us to even start analyzing if the pattern is legit or something like that. We haven't had something like that just yet. It's just a scenario I'm presenting to you that could also potentially happen on the quant price. So yeah, tell me what you think in the comment section. I'm leaning to the bullish side more than the bearish side, but we'd have to reanalyze when anything goes wrong, right? So yeah, this is it from me. See you on the next one. Take care. Bye. Don't forget to subscribe and like the video, right? Share it with your friends and family. See you. Bye.